Yeah.
Okay. So before starting today's session, we are doing finance today. I just want to know about your knowledge on pre-sale. So I like to request each one of you to give an overview of your company, Shining Glass, in just 2 to 3 minutes, not more than that. The key points. How it should start, like for example, you can say I'm Anu, I'm finance manager working in Shining Glass, and my responsibilities are so and so that I have given you in the ICANN statement, and I work in Templand. We report according to IFRS. Then our company do this, this, and this, like that. Okay, that I'll just get an idea how prepared you are for the pre-scene. Then once it is done, we'll discuss the financials. And once everything is done, you have to write a summary and share on the group for 3 4 pages in your own words what you understood from the pre-scene. Then you have to add financials also. In that, we'll see your writing skill also and what you remember from the pre-scene. You can refer to the pre-scene, that's not a problem, but you have to write from your own words. You don't need to copy the facts directly, because the most important part is the pre-scene. 50% is the pre-scene itself. A lot of students will have problem with understanding the pre-scene, or they don't know the facts correctly. Okay, any question? So first you can talk about the industry. You can keep this handy also if you want. Who will start? Hello.
Yeah, Misbah. Even I can start.
Sure, sure. You got the point, right? Keep it short, just 3 minutes, not more than that.
Yeah, it's exactly 4:13 here. Yeah,
Okay, start.
I'll try. Yeah, if something is wrong, please correct. Add on later. Well, so the case study is all about the Shiny Glass. That's our company where we are the finance manager in
You
the.
say like I am Sampath, I am working. Say as a
Okay,
first, what
okay,
our company do. Be very
oh,
clear. It's like you're explaining somebody to a layman who doesn't know about the pre-seed.
perfect. Okay.
Everything as a
Hey, guys.
first one. My risk,
Mm-hmm,
my company risk. Like that you have to say.
mm-hmm.
Yeah.
Okay, got it. Hey guys, myself Sampath. I'm a finance manager at Shiny Glass, working in the head office in located in Thailand. And just to give a bit of background about the Thailand, our company background in Thailand, we use our Thailand in currencies, and we report in accordance with the IFRS. And I report to Martin Tawani, who is a senior finance manager, and then he reports to the financial director. Yeah, and our Shining Glass, our company is manufacturer of double glazed windows and the door, and we are operating in the domestic. I mean, we are operating in Thailand and giving a service to the domestic and business properties. Okay, and we are the leading manufacturer of doors and windows for the double glazed industry. Okay, so the whole purpose, that's about the little bit about the company. And to talk about the company, yeah, we are like in head office, like we are working like 240 employees. In at the factory we are like around 160 employees full time, and with the Shining Glass payroll, overall 400 employees. And we are we are heavily relied on the suppliers. Yeah, so when we say suppliers, we are depending on the sealed units, which is we purchase from the top three sellers, because we don't manufacture the sealed units. uh, we are heavily dependent on them because it is cheaper for us, you know. So if we start building our own, it is the high cost. So that's why we purchase, and all the hinges, locks, and other supplies also we purchase. And here, when we purchase, after the purchasing, we will deal with like a sales team. We are they are like a freelancers. They I mean, the client customers will directly book the order, and then the sales team will go and visit, and then they give the measurements and the pricing quotation. And once the pricing quotation is approved, then the operation team will send the contractors who are like our installers, so they will send the surveyors to do the final take the measurement. And once they took the proper measurements, then it will come for the production. Then our factory, we are like located our head office and as well as our factory located in the same place. And in that factory, like they will cut the all the UPVC or aluminum according to the customer requirement. We will cut into their required size, and then we will assemble, including the double glazed windows according to their exact sizes, and then it will send for the installation. Again, for the installation, it is the same third party contractors. As and when the installation comes, we will give them a list, and then they will go and then fit. When they are going, they will carry our logo and t-shirts, so that the client will understand that it is from our side, because there is no direct interaction with the installers and the customers. They will do the installation or the repair through us. And our company, like once the installation is done, again we will take the client's feedback as well to get the service satisfaction. If there are any issues or the complaints, we will address that. And we give a guarantee as well, like with our products, like especially the one which is not covered as part of the guarantees, like if any glass break or anything damaged because of the accidental or leakage in the sealed glass, that is covered till 1 year. I mean, beyond that it is not covered in the guarantee. Yeah, but anyhow, accident which is immediately not covered with the effective from after the installation. So that's how the process flow it is working. Yes, of course, there are a lot of different types of glasses are available, uh, where we give according to the market, I mean, customer preference. So few of them is like a toughened glass type. Some customers look for more tough, it's very hard to break, you know and some of them like a laminated safety glass as well, where it is outside the glass layer, it is laminated, so it will avoid the easy breakage, and it is difficult to break, and it is a two layers of glass as well, and it won't release the fragments of the glasses as well. And one more thing, type is like a frosted glass, uh, which is usually fit for the bathroom windows or the doors. Okay. And another one is like a soundproof glass, which is like for especially on the whenever there is a recordings, especially studios. So in such places, they use that. And there are two or three types of window frames that comes. Like one is UPVC, which is uh, very frequently or most commonly used one, because it is a cost effective as well, and it can be uh, attached to the directly to the bricks or the concrete, so that it won't rust anything. And the another part is like aluminum as well. Yeah, it is little heavy, but it is still an long durable item. And another one is wood type, where a lot of old or the what I can say, like lot of old or historical buildings, uh, they still are using the wooden framed or single glazed glass as well. So, but however, we are not looking into the wooden frames. Only we are I mean, aluminum and UPVC. These are the materials that we use it. I think I took more than 5 minutes. I'm sorry, guys. So that's all about. I will stop here. So probably let others speak.
Yeah. So similar exercise by others also quickly. You can add maybe, for example, maybe a risk, a strength, or opportunity which you feel as well in that. It's not exactly about the fact, but some few points you can add from on your own also, but just make it short in 3 minutes. Okay. Next.
Yep. I'll go next.
Okay, Manmeet.
So, hi everyone. My name is Manmeet Singh. I'm working as a finance manager in the Shinyglass. So, Shinyglass is a company which is based in Templand, and they manufacture double glazed windows and doors, which we could install for domestic and
Can you explain
commercial purposes.
what includes manufacturing of double glazed window? What does it mean actually?
What does it mean, Alan?
What we do in manufacturing?
We
Do we make glass? Do we make frames? Do we make or we just assemble?
what I believe, like we generally source the material from the three sealed units, and we just assemble it. In my opinion, but manufacturers do manufacture it. So I think the
So
float
that's
method,
about
which was
manufacturing, right? So we
yeah, so the float method which was discussed, I think they do manufacture, but they have sealed units which help them get the paints and the space bars and all.
okay.
Yeah.
All right.
I'm not sure if I'm right or wrong. You
No,
can correct me later.
I think that's correct. Anybody has other thoughts on that?
They are not manufacturers, I believe. Shinyglass is just a door and window fabricator who assemble, sourcing the portions like seal units and the portions of UPVC and metal frames, using also buy the hinges and brackets to assemble them. And yeah, so they are, I would say, that are more of assemblers, sourcing all parts and parts, and they do that business with the help of this commission, the salespeople and third party installers and surveyors and then repair people.
I think the assembling part comes, or we call it directly, if there is no cutting or they are not doing anything, just fix the things. Here,
But
it's not
they
the case.
have a heavy
They
machinery, like precise
correct.
machinery, computer, numerical, um,
No, no, that's a different one for
CNC,
the order booking.
CNC
Yeah,
tool.
those machines, the glass part, I think, I'm not sure, but I am very confident what I have read too about the case study, because the glass, the floating method was explained when they were trying to explain about different glasses, like how they attempted to explain about frames made of UPVC, aluminum, and wood, and for what purpose, and pros and cons of everything, like in order to understand the suitability of that material for various purposes, like let's say domestic and commercial, and maybe weather dependent can rely or not. And likewise, the kind of glass they use, let's say single or double glaze, but there are kind of glass like you toughened and float. So that toughened glass made of float method, or otherwise, uh, a kind of opaque glass, which is meant for the washroom, like where you don't really need, you need some, you don't need a transparency, like you need some
Opaque.
opaqueness. So likewise, so as per my understanding, they are just assemblers. The fabricators were who just source all these parts and they assemble as when they are assembling, when they really need to customize or when they really need to do something like as per the fitness needed. So the kind of equipmentation and kind of methods they use to cut it to make it to a suitable design or to fit into the size.
I think, see, the thing is like they get the UPVC or aluminum lens, and they cut into the according to the customer preference. They cut it and they join and they fix, they assemble it. So I don't think it is fair to call them as an just an assembler. Rather, they are the manufacturer of windows and glazed, using some of the finished goods. They take some of the finished goods and then they will convert into the according to the customer requirement, and in the form of like a windows and the doors. Ultimately, they are also in manufacturer only, but they don't manufacture the raw materials or the finished goods what they
Maybe
use.
what they are doing
I would
is,
say the
Yeah.
manufacturing of
yeah,
the
Manmeet.
final product as a window they are selling. They are taking components from different sealed unit manufacturer, and how they are manufacturers. They are manufacturers in the terms of the final windows and door which they are providing to the customer. I think in
Exactly.
that case they are the manufacturer.
Yes.
But
Right.
they
One thing is they might be getting glass from there, then the frames and everything, but they're actually making into double glass, double glazed. Sorry,
yes,
they're
yeah,
putting that space in between. They're putting that gas,
yeah,
assembling, and
absolutely.
actually normal glass they're converting into a double
Double glazed.
glazed window. So that's the value
Yep.
they're adding.
Yeah, got it. Now it's clear. Yes.
So in that way, they are manufacturing it, right? It was not a same glass when they get it, and they've added a lot of value just not assembling it.
Yep.
Okay, Manmeet,
Thank you, Misbah, for clarifying it.
no problem.
Yeah. I'll start again. So,
Yeah,
hi,
thank
my
you,
name
Misbah. This is really important point to the clarification.
so I'll start again.
Yeah, please.
Hi, my name is Manmeet Singh. I work as a finance manager in Shinyglass, which is the uh, uh, which is a manufacturer of double glazed windows and doors uh, for installation in domestic and business properties. We are based in Templand, and uh, I work along with Martin Thavena, who is the senior financial manager. So we deal in multiple type of double glazed window. It could be uh, made with the mix of different 5 types of glasses like toughened glass, laminated safety glass, frosted glass, soundproof glass. So we can combine them and make into a different type of uh, windows altogether as per the preference of the customer. So talk more about the business model of our company. So we generally define the value for our employees and customers by making quality doors, and basically we define value by making quality doors and windows for our customers. And our salesperson and the installers, I we keep a good care of them by commissioning them, and and also providing a steady source of revenue. We create value by partnering with various businesses, and we have a very vast network of installers which help us to uh, provide the final to have the final thing done to the customer. And uh, and we also create value with our double glazed window, which has a lot of saves 10 to 15% of heat loss. It reduces carbon emissions, and they are also very durable. Once you have installed it, it will last for years. If we have to term years, it could be like minimum 4 to 5 years, unless some unusual defect happens, which is very rare. We deliver value by uh, taking care of our customers, by giving them after sales services, talking to them. Our salespeople are really involved in this process, and we try to ensure that the entire process from booking the window to installing it at our customers' location are done very smoothly and fluently. And we capture value uh, by generating a lot of wealth and using them wisely, taking large orders of these uh, uh, of these windows, which are very expensive. We also provide huge discounts to our customers so that we could get uh, better offers or large quantity orders from them. And we also try to maximize our investors' wealth. Uh, in terms of the market share, so currently we hold around 20% of the market share in Templat, which is 1/5 of the total. So it's very big. We have been into this industry since 62 years. We were established in 1962. And if I have to talk more about the financials from last year, we have grown like 10% in terms of revenue, and our profit PAT has grown like 115 for like by 15% uh, in terms of last year. Our loans are specifically, they didn't increase. We are using our retained earning to enhance it. Our cost is minimal because we already had some cost, and we are generating revenue with that amount of cost. We were able to reduce our operating expenses. And last year we had a dividend payout of 75%, which is a big deal. So that's it.
Okay, good job. Okay, next, Anu.
Misbah, no, I'm not ready.
Okay, no problem.
Sorry.
Amruta.
Yeah, hi. Um, okay. So I am the finance manager of Shinyglass, and Shinyglass is operating in Templand. Um, um, we prepare our financials according to the IFRS. So to talk about a brief history about Shinyglass, our company was founded in 1962. We from Since then we are the largest fabricator of double glazed windows and doors. We have We were the first company to introduce UPVC, and we also make sure to develop and introduce new features to the doors and windows. Um, we have a heavy customer base and is very popular in Templand. Uh, then we mainly manufactures UPVC and aluminium doors and windows. We usually prefer aluminium doors and windows for commercial properties, and UPVC doors and windows for the house properties. Then we have our marketing is like, we have an up-to-date website, and all the products and developments are mentioned in our website. We usually advertise through newspapers and uh, television advertisements. Then our salespersons are not our employees. Um, they, uh, they are all self-employed and are paid on a commission basis. Uh, then we have the installers. They are also contractors and self-employed. Uh, Misbah,
What,
I
what
don't
is
know.
our market share? You can see, and I'm not expecting you to remember everything. You might have seen in the presentation. You can talk about what is the difference between normal glaze and double glaze. What
Okay,
is
so
our market share? Who is your competitors?
okay. Um, uh, the conventional type of doors and windows were the single glazed, and there were many limitations while using the single glazed windows, because 70% of the heat was due to condensation. 70% of heat was getting lost. It was not. It was easy to break. Then it was mostly having the wooden frame, so from the gaps in the wooden frames, the heat was getting lost. So these were the few limitations of single glazed. But when it comes to the double glazed windows and doors, only 10 to 15% heat is being lost. Then it is difficult to break. It is breakable, but it is comparatively difficult to break. And we can make different designs, and it is customizable as per the customer's requirements. The different frames available are UPVC, aluminium, even wooden frames are also available. Uh, then Templand has the largest market share, and its competitors are
And
Vestaglint.
Shinyglass has the highest market.
Yeah, the competitors are Vestaglint, Plastelism, and Trendaflat. Um,
What are the major risks? Have you done the SWOT analysis for the pre-scene?
yeah, the major strengths are uh, um, uh, they own the major market share. They have a large customer base and brand awareness. Then uh, uh, what else?
What are the people's experience? What are the salespeople experience? What are the major problems they're facing?
um, they are paid on the they are paid on commission basis, and only if they close the sales they will be paid, and also only if they provide more than 45 percentage they won't be paid any commission. And from talking from their point of view, it is kind of an unstable situation for the salespersons.
Okay.
uh, Talking about opportunities, they can diversify their product line. They can introduce new set of product lines which is specifically required by which specifically requires heavy security, banks or any other corporate companies. Then uh, one of the threat which I identified is that they are currently on a saturated level, because double glazed windows where people were ordering double glazed windows as a to replace the conventional single glazed windows. So by 2000 we can see a saturation level for the demand. uh, yeah, I think
Uh,
that's
any risk? Any opportunity?
opportunity is expansion of product line. uh, then
Okay, no problem.
mm,
So it should be by heart. So you need to read the pre-scene and you need to kind of remember. It's your company. You should know everything inside out of that.
yeah.
So you have to do the 4 to-do list, which I was already mentioning, but you have to do and share it on the group. Okay, you can take like 2 3 days for that. That's not a problem. I've just put it on the group. You can do it later. Okay, we are moving to the next. Ebin.
Hi, okay. Myself, Ebin. I'm the finance manager of the Shiny Glass. Okay, first of all, I will talk about my company, Shiny Glass. So, Shiny Glass was found on 1962. We were the early pioneers in the double glazing industry, and in 1980, uh, like 19 and we also introduced, we were the first movers on the we introduced the UPVC frames to the country, and after 1980 we became the industry leaders in the company. If you took 40 percentage of the 40 percentage of the market share is shared by 4 companies. In that, four Shiny Gas is a top seller, around uh, 300 million is the sales revenue. Uh, and what what does Shiny Glass sells is Shiny Glass is the manufacturers of vinyl uh, finish windows and glass window frames and glass frames. Also, we will help this uh, doors and windows, glass doors and windows to install also for the homes, households, and the commercial, uh, for the shop commercial places also. And when we talk about the product, uh, we we use double glazing technology for install uh, for the windows, for the glass windows and the glass windows and doors. What's the benefits of double glazing is double glazing help us to uh, uh, keep the heat within the house or the industry, or the shops in itself. It is more secure to compared to single glaze, and also it's very it's a sustainable form sustainable uh, product, because it will reduce the energy consumption, and also it's more secure compared to single glaze, especially places in UK as a Templand, where winter can get cold. When the winter times, the temperature goes below, it would be it will give an ideal situation where heat will be kept within the apartments or in the commercial properties or etc. So it's the ideal glass for winter winter winters, where we have winter, when the in the winter where the temperature gets low also. So how does a single double glazing work? Basically, we in a frame we use two glasses in, and between that glass there would be air or air-gone gases. So that air won't go out or in. So that is our product. Next thing I have to say is about how how we will produce and
Can you
how we
also
will.
talk about your responsibilities? Because I was saying about I can, what you should be able to do.
Okay,
That I think others also missed it. Yeah.
yeah.
You
So
can see and talk, no problem, from the list.
so
What is your role?
so
What
what?
value you are adding to
Okay.
the organization?
So my roles include to helps in financial reporting, helps them in new any capital expenditure products, helps them in the new project management, help them how to communicate, help them to create new policies, procedures, rules, etc. And also helps to how to reduce the cost, increase the income, and uh, how to manage risk. That's one of my priority. And hi, Mr. Can I now go to the
Yeah,
products?
you can go to
Well,
that. Yeah.
yeah, okay. Uh, so what I would say, so let me explain how we will let me explain how we will from the production to uh, how we install the end products into the homes or households or the commercial properties. How we do that? So for the production, we actually collect the aluminum and UPVC frames from another companies, for external companies, and do we will they use extrusion, a method where we can use, especially for making window frames and door frames, etc. And this process is called extrusion, and we mainly depend on three manufacturers for the sealed units. With this, we will with the use of I'm not sure what is the name of that software or that machine, but we use that machine to cut the cut the frames and put the glasses into it and with the sealed units. Okay. So this is how we make the products. And next thing is, so for selling this, we use sales persons who who we will give regular training in 6 months. So we are giving regular training to them, and but they are on commission, fully commission based. Their salary is based on full commission. So whenever they make a sale, they will get the money. So basically, the job security is very less for them, and this is also a reason for high sales uh, high employee turnover, can be also a reason for employee turnover. But the thing is, if they are able to make sales in a good manner, means they are getting a salary above average of an average uh, employee employee compared to an average employee, and they are able to get up to 25 percentage of their sale. uh, Depends on the uh, uh, d- uh, depends on their discounts and the quantity of the sale. And a salesperson is allowed to make 60 uh, percentage of discount. But if the discount goes above 40 percentage, it is actually very the sales shiny glass will deduct the extra above the 45 will be on the cost of their will be according, it will decrease their commission also if it's above 45 percentage of discount. And the next thing is, when they make the sales, there's a regional sales person for the shiny glass, so he is salaried. And this person, he's the one who approved the quote or anything. So so if he thinks the discount is not appropriate, he can cancel that code. So the salesperson should be able to convince the sales manager, the sales regional manager also. So the salespersons are uh, expected to go around like 80 kilometers for the purpose of the sales. They have to introduce the say sales item, the they have to introduce the product this to the customers. They have to take measurements, and they have to give this measurement to the operations team. And operation teams will use the diary. They have an diary online diary thing. With that thing, the operations team is able to make appointments with the installers company. So another thing we are using is installers company. So we about to have 40 company or something for this, and we are working with them. So for installation, we are highly depending on this installation companies. And this installation company will use will either give subcontracts, or they have their own installers to install this things. So if the installation people finds out that the measurements given by the sales people is wrong, whatever cost due to this will deducted from their salesperson's commission. So this is the major process. And uh, so if the customers want to enquire about the products, they can enquire this with the call center, and the call center will inform this to the sales department and operations
What are the
operations team and
type of glasses we do? What are the type of glasses we have?
uh, the type of glasses we have is type uh,
like soundproof glass, then
Toughened,
toughened
toughened,
glass. Yeah, toughened glass is one of them.
toughened glass is there. For lamin, I forgot most of the. Sorry,
Laminated
this
safety
is my
glass is one of them.
yeah, and frosted and opaque. I think opaque is there,
Okay, no problem.
uh, and soundproof glass.
Yeah,
So we
it's
have four
okay.
types of glass.
It's five. It's no problem. I got it. So, we need to be more crisp. We don't need to just, go around it. We need to come specific to the point and make it a short. So it's already 3 minutes. Good
Okay,
job. No problem. Everyone is done.
okay.
Bilal, you want to try? Bilal, can you hear me? Hello. Others, am I audible?
Yes, Misbah.
Yes.
Bilal, can you hear me?
I think seems to be a net issue. He's on
Okay.
mute.
No problem. So basically, guys, you have done a decent job, but I was expecting little better. I think honestly, you guys are not reading the pre-scene daily, right? There is definitely a gap because you're talking, but the way when we talk, we read it few times, and when we read like multiple times, there is a difference. When we read multiple times, we'll find about the things which are like reading between the lines, reading between the points. That is what I was expecting, but most of your thing was very generalized. What is there in the fact, what we understood from the fact, that's what I was actually looking for. So we have to prioritize the pre-scene. If you don't prioritize the pre-scene, it will be difficult to add quantity and quality in the exam, especially quantity wise also will struggle. Why we are doing this, why we are not doing this, why might be based on that, what can be new products we can add. We have this much market share in Templand, we are the leader, so what are the benefits and drawbacks of being the leader, industry leader, isn't it? So that thing I was expecting, and we have discussed most of that in the class during the pre-scene analysis. If you have made notes, okay, go through that notes, then go through the pre-scene again, then write a very good summary and share on the group by evening. All right, before you sleep.
Hi, Misbah. Sorry, I had an issue with the internet. I'm not fully ready to give the summary, I mean, verbally, but I will make notes of it and then I will share it in the group.
Okay, you have to do it today itself before you sleep.
Yeah, sure, sure.
Sorry, Misbah. To be clear, summary should be how. Can you tell me how many words it should be?
I've just shared on the group around 1500 to 2000 words.
Okay.
So summary is not copy paste from the pre-scene. It's all about what you understood. If you just take some fact here, doesn't matter, right? Obviously, you have to take little bit of facts and build on that. It's not like just taking it from here or just minimizing what they have given here. What you understood. So everybody's summary will be different. Different as in different understanding. Okay. And on the end, you can do little bit about the financials also. Okay, let's start with the finance. So firstly, as your role, finance is also an important. Basically, if you see the syllabus also, F2 is there. You need to do the reporting questions and everything. However, there is no calculation, so you don't need to carry any calculator. Though they'll give you an access to calculator in the system itself, but you won't be needing it. You need to understand some of the calculations because especially from P2, that NPV and IRR, it may be an attached material for the question. So what does it mean? What are the advantage and disadvantage of that? And if they give you some costing, you should be able to analyze it, and that will be very simple. You don't need to worry about it. Okay. Now, what is the primary reason of understanding this financials for the pre? Firstly, we have to see what the company is performing. Therefore, they have given for the last year data plus this year data. Okay, one good thing CIMA has done recently is previously they used to do December because they closed the year in December in UK, right? So it was a very big gap. Now imagine if they have closed the year on 30 December, we'll have data about 23. December, and previous year 22 December. So it will be almost like 11 months when you write the exams. There has been a lot of changes happening. So to make it closer, they have brought it to 30 September. So it's just like 2 months old data when you write the exam, right? So that is an advantage. Then next thing is we have to see what are the changes happening in the organization. Sometimes what happens, the revenue goes up, the cost goes down. That is what we're planning. That is ideal situation. In other scenario, recently we are looking one pre-scene in strategic case study. What happened, the revenue has gone down, but the cost of revenue or cost of goods sold has gone up. It is little bit weird situation. It's not usually there, and they won't tell you why it has happened. So we have to find what can be the issue. We have to understand the industry from that perspective. Okay. And moreover, we have to look at the specific ratios. We have to focus on ratios which are important for the investors like shareholders and all. We have to look at the ratios which are important for the lenders like banks will be focused on what? They'll focus on gearing, they'll focus on interest cover ratio. Okay. And as a whole, I mean, again, we don't have information to calculate all ratios, but whatever we can, like gross profit margin, operating profit margin, what does it mean? What are the characteristics of that? That sounds basic, but it can be important. And you can take the help of the familiarity kit also to understand. But it's better you do your own calculation, then you understand what does it mean. And if there is any specific ratios you don't understand why we are doing it, you can just share on the group, or we can go to Investopedia. From there also you'll have an idea. Okay. Another thing we look in this is obviously we have balance sheet to look at the assets, current and non-current asset. This trade and other receivables are very important. Usually when we are doing business to business with the contractors, we might have to give on credit, but we have to manage the credit risk. What is the management of credit risk? That what if there is a failure in the payment? So we try to put a limit, we try to put a cap on the trade what we are giving. Then how much cash to hold? Cash is usually at the bank because profit is not equal to cash. So we use different levels of accounting. Then they also give for one computers. One of the reason to give about the computer is to understand how it is happening in the industry. Usually they give someone which is very closer, who face the same kind of external risk. Usually, or external issues is a better word. External issues. So they'll take somebody from same country, like Templan and Templan. Same industry, same industry. Similar size, similar size. So there will be a lot of factors which will be similar. So we can easily benchmark with it, easily align with it. Okay. You don't need to remember anything from computers. It's just for the comparison. Even for our company, they won't ask you. If you feel there is specific something and you have to use in your exam, maybe you can remember it to justify it. For example, they ask you to go with debt or equity. So you believe like going for debt is beneficial because we still have a lot of tax benefit. You can say our gearing is still low and going for debt is this much. Our gearing is this percentage and we can still, you know, use it for better. Let's say our gearing is 33%. So why can't we utilize it? Because until 50% is considered safe. So we'll have tax benefit. If you want any specific number and you forget, let's say in the exam, then you have access to the pre-scene also. However, not suggested to go to the pre-scene again and again because it will waste your time. You're right. Any questions? They won't ask you anything about reporting in the in the financials, how they have done in the pre-scene. Like was it done correct, or you have to find mistakes or something like that. This is just to understand the financial health of the company in simple words. So based on this, we can kind of recommend the future decisions. We can kind of understand how big we are, right? What things are going good, what things might not be going good. What may be the fixed costs we are facing, what are the variable cost, how we can, let's say, control the finance cost, or how we can leverage debt. from both the point of view. If you see one thing like looks a little bit weird is like tax has gone up. It's 5.7 million. Previously it was 2.4. Even we have not multiplied our revenue that much, but tax has been multiplied more than 2 times. What may be the reason for that? So there are a lot of gaps we need to just discuss and try to understand. Okay,
Misbah, I have one question. If you
sure.
go to the balance sheet, there is like inventory is too low for both the companies. Any
Right,
specific reason why? Because manufacturers and fabricators have a lot of inventory ready in general aspect.
right. That's a
They have,
good point. You're saying this one, right?
yeah, both the companies. It's not with them. It's like both the company have very low inventories.
You have 2.1 million and how much they have? 1 second.
1.8 and 1.2 in the previous year.
Yeah. So technically, there may be different ways of looking at it. One way I look at it is in a positive way if you have less inventory.
Yep.
Reason being, nowadays companies are moving to just-in-time approach. I think in E2 or P2 you have gone through that concept. What is
Yep.
just-in-time? We want to keep the minimum inventory. So what happens? Minimum inventory means you have less cash that is occupied. You have more cash for the working capital. And this also means in the industry they might have good relationship with the suppliers, so they don't need to hold the inventory. But at the same time, if the company is holding too less, then the problem is they will not be able to deliver on time. But I believe in this industry, usually we'll get orders beforehand, right? We have some time to prepare. It's not like we have taken the size of the windows and the place and everything and you have to just install it today. We'll have 1 week time, 2 weeks time, and especially when we are doing with the contractors, the bulk orders. So there also will get good amount of time when we can
Also,
get the inventory.
also, Misbah, I think we also have to consider the uh, what do you call the external company's time frame, no? The installer's time frame also. So I think we have more time considered to like so if we are fixing a
Installer's
date means
time
we
means
have more time.
what do you mean by installer's time?
So like so anyway we are using this 40 companies for the installing this product, no? So we also have to anyway we also need to check their time also, like when they can install this kind, then only we can give a date to the customers, no? So anyway
Yeah,
there will be a time period, so they make use of that time period by not using less space, inventory space, I think.
right. Definitely, we should be using the technology here. We should have the big data, our own
Yep.
company's data, how long it takes, and usually what the companies, the customers or the client's expectation is, how much time the computers are taking. And as far as installer is
Yes.
concerned, we should have enough number of installers to prioritize this work. We cannot wait for them, but obviously we can have some limited period time for them, like they should do in 1 week or 4 days, depend.
Yeah,
Oh,
and
and
this big data will help us to have a KPI also implemented, and on the base of those KPIs, we can do some shifts in the commissions as well, which
Possible.
could be a win-win for both sales and the company. But
Makes
my
sense.
opinion was if we are having a lower inventory and
Mhm.
there is this 14 days cooling period as well. So if my inventory is ready and if I could schedule, if the customer is ready to take the delivery and get it installed within 2 and 3 days, and if I have that inventory ready, I could like use that opportunity and just after that, after once it's installed within 3 days, our customer service team or the sales team could just contact them continuously for 14 days. And they could just manipulate some of the numbers, like if they have offered a 40% discount earlier, just to keep it handy, they could do 45%, which is the threshold for them, so that the company don't go away.
Right. Or we can charge premium for some clients who want in emergency, like just want in 2 days. Okay, you have to pay a little bit extra.
Yeah.
Also, Misbah, p- uh, found that operating expenses less. If you look at the operating expense, so usually it should increase, no? But if you see that it is decreasing for the shiny glass compared to the uh,
Yep. Even
West lens.
I noticed that. But I
Yeah.
have an analysis for this because in 2023 you will see the PPE got increased. So in my opinion, they had invested in some technology in 2023 and some equipment which was obsolete and which was taking higher electricity or other cost to cut the glass or making the final product. So that's why there was a 4 million increase in 2023, but in 2025 it got reduced. So I think they just sold out their obsolete machine and they just invested in 2023. That's why I think this cost saving could result. This was my analysis because PP decreasing is also a different thing. Which, if a PP is decreasing and it helps me to increase my revenue, and my cost of revenue has also not been increased to that extent to which I have increased my revenue. So, in my opinion, I think they had some obsolete machinery which they had sold or they just disposed it off and they invested a new machinery which is giving them benefit in 2024.
I mean, good point. Yes, that may be one reason. We have to now
Yeah,
speculate kind of thing why this would have happened, or maybe they have just invested in training. The same machineries they have improved the efficiency and effectiveness at work.
possible. But PP has decreased by 4 million. So I was like, why it could be possible? Like, how it
Right.
could be possible? Like, PP
Let's see. So
decreased.
first, if we just talk about the revenue, if you start from the start, the revenue has gone up by around 10%,
10%. Yep.
9 to be exact.
Yeah.
So the first thing is we have grown a business. Second thing, when we talk about revenue and we don't know the market share exactly, that is also a problem. Many times what happen, company just inflate the price little bit. We have to increase the price to manage the inflation. Maybe
Hmm.
we have increased the price by 5% and we have got a growth of 5%, then it's coming to 10%. It's not like we have grown. Getting the point?
Yeah.
Because we have grown in numbers. If there is inflation, to manage the expenses, we have to increase the cost as well. Then
Yep.
cost of revenues, it is always
Increase.
ideal to control the cost of revenue or cost of goods sold, but many times we have variable expense, especially when we are having a lot of raw materials. We have to pay a lot of there's a lot of cash outflow. It's not like we are doing most of the supply chain here, so definitely this thing will go up. So what
But
what is
it
the
has only gone up by 3%, whereas my revenue is like grown by 9% or 10%.
10.9? Yeah,
So generally in manufacturing segment, we can see a 50%. If 10% growth, then my COGS will grow by 5% in general
right.
cases. There is like 50% growth. So they are doing something really good in order to just increase their COGS by COGS or cost of revenue by.
So this is also one strength, you can write it down. Or maybe we have a lot of capacity with our machineries and everything. Or a
Yep.
deal, we are getting a bulk deal discount also when we are buying the raw materials. So this is something which is going good for the company. Then if we move on to gross profit, that is also gone up by 16%. Why it is 16%? Because we have saved a lot of money in cost of revenue, cost of goods sold. Otherwise, it would be also in a single digit. And because of that, we have got increase in operating profit. But before that, we have to look at the operating expense again, and strength for our business. Not a major difference, but still we have tried to bring it down, right? Almost how much? 0.9 million, we'll say. 0.8 to be exact, right? So 51.5 or 50.7. So this will be like Manmeet was finding out, maybe because of we have got better technology, or maybe we have more efficiency, like PP PPE is actually reduced. So they might have get rid of some machines. Sometimes what happens, the PPE will increase and our operating expenses will go down because of that. Another thing we can notice is there is an increase in intangible assets. So intangible assets is like what? We have got licenses, we have got some patents. So that could also have an impact on the operating expenses. Maybe we didn't have the license, or there is some regulatory thing which was putting a limit on that, or that was an hurdle. Now that has been solved. That is another advantage for us. And if we quickly compare this to the competitors, so we'll have an idea, was it same for them or we just got benefited out of that. So West Aglant is the thing. So if you see, their cost of revenue is also very similar. That has not gone up too much. However, their operating expenses have gone up. That means we have done a good job. So why we have competitors here to do the benchmark, to compare how we are performing here. Are you getting the point? So this is an advantage for us. We should just find out what worked for us, and we should try to continue that, because there has been companies who are able to increase revenue because they spend so much money in marketing, but the problem is only revenue increase, the profit doesn't, or the profit margin doesn't, or the percentage doesn't. So technically that is not successful. We have to make sure the revenue goes up and the cost of revenue or operating expenses, basically all of this cost of goods sold, is controlled. And that is the best thing. From the same operations, you are able to extract more profit, isn't it? Then finance cost has remains the same. What is finance cost? Basically the interest what we are paying. So companies want to leverage on debt because we have tax benefit, and at the same time when things become more, they want to get rid of it or reduce it, so they don't have the bank covenants. You guys know what is covenants, right? Covenants are like promises which we need to follow. It's kind of contract we did do with the bank, basically the lender. Like, we'll not pay this much of dividend, we'll control this asset in this way. There can be positive covenants, negative covenants, like that. So if the finance cost is same, then the non-current liability should also be the same. The non-current liability remains the same. It is 800 million and it is still 800 million. So there is a chance, if you want to invest in new technology, if you want to go into new market, what I am seeing till now is the company's financial looks healthy. So this looks a good time that we should go into a new market or come up with the new product. We can utilize that opportunity. You guys agree with that? Then the best part is the profit before tax has gone up. I mean, it's more than 2 times increase in that. Then the tax. But one thing is why the tax has gone up so much. If you look at the percentage, how much percentage we paid the previous year? If you just do 2.4 by 20.3, how much it is coming? It was like 11.8%. Hello, am I audible?
Yes, yes.
11.8%, and now if you do 5.7 by 44.2, you have paid 12.89. So 1% extra, more than 1%. So this may be because of the profit we have been into a different tax bracket. That may be one of the reason. What else can be there? Because we are talking about direct taxation. If you have another indirect taxation, Usually it is done, later on. Later on means even after the closing is done and all. So that will put into the current year's liability. So current liability should have gone up. Yes. If you see here, it was 2.6. Now it has gone up to 5.2. So this is usually indirect taxes. Is it making sense? Hello?
Yes, Misbah.
So you have to remember this part, and you have to see how it helps us. Like one way it is, we can understood is, we have good PPE, and our finance cost has been maintained, so we can raise debt, and overall the profit is also growing for the business. So we have cash in hand. So this looks stable situation for us to grow. Imagine companies going in loss, revenues are reducing. That's not something suitable or acceptable for the stakeholder also to take some extra risk. But when things are comfortable, that is the time to move on. If you see changes in equity, so they have not mentioned if you are a listed company, so I'm assuming it's not. But even listed companies, unlisted companies have the shareholders. So as a shareholder, what they want dividends, they want share in profit, they want the increase in dividends. So if we see the balance on firstly, this is on paper. It's not like if we show this much of retained earnings, we have this much in cash, because of the accounting standards. We use accrual based accounting and all. Only thing we can say as the cash is what we have in the bank, that is current asset. But anyways, if we come to the profit, how was is the profit after tax? PAT 38.5, and out of that we have paid 28.9 as a dividend. Usually companies want to pay around 20%, 30%, not more than that, because they want to retain that money for the future investment. But currently we have paid around 75% as the dividend, which is quite high. It is not usually suggested or companies do. However, there is one gap. We don't know it is one-off dividend or every time company is paying. What is the difference between one-off dividend? One-off dividend is like company when they make very heavy profit, or when they have a lot of money and they don't find an good investment project, they give the money back in the way of one-off dividend. Or maybe they can do share buyback. Share buyback is again they'll just buy back their own shares to reduce the number of shareholders. Now, if you just compare the profits, sorry, the dividend with our competitors in percentage, somebody is coming 17.5, it's coming 76. So it's almost the same. We have paid around 75, they have paid around 76%. So that may be the industry norm also, because there might be certain shareholders who are part of us also and them also, or they will switch if we don't maintain that. Our dividend is not a part of your role as a finance manager. It will be the responsibility of senior manager and the board of directors. So they won't ask you questions on that. However, indirectly maybe you can comment on that if something comes with the financing, that three things or three pillars are interconnected. What are they? Dividends, finance, and investment. Because how we are getting money is through the profit, and if we pay that profit out as dividend, then we'll not have enough money for the investment. And if we don't have enough money for the investment, then we need to finance either through debt or equity. So if we have less money for financing, for investment, then we have to go with the finance options. If you don't have good finance option, then you have to save money from the profit. You don't have to give lot of dividend. And if you're giving away, that means you have good options for financing. Okay, it's all interconnected. No decision can be taken into isolation. Then share capital and premium, you don't need to worry about this. However, one thing you can say, like now they are saying balance on 30 September 24 is 1,220 million, right? So we can say that some part of that should be there with us. So we can say we can use some of that retained earning to invest in some of the projects. But we don't know exactly how much of that is in cash. So we can say around that, or you can be a little diplomatic when you're writing. If they are saying to use debt or equities, we can say we can use debt, but at the same time we can use some money from the retained earnings. However, we need to keep some retained earnings in house for our working capital to manage the working capital. You don't want a cash flow issue.
One question, Ms. Ma'am.
Yeah.
Looking at the, I mean, they had given only the share capital and premium as a 400 million. So does it mean that like they are not listed? Because I know that in the entire pre-scene they have not mentioned anything about the listed or not listed.
Hmm.
But in only in the balance sheet we can see that share capital and the premium, and also they are giving a dividends. Can't we assume that they are still listed, though they have not specifically mentioned?
I think they are unlisted, because if they are, they would have mentioned straight up. Because when the company is listed, so many things will change. The reporting and how we operate, we have to be more careful with the strategy. So you can assume that we are unlisted. Previously, in one of the case study, they have mentioned. I mean, whenever it was, they have mentioned. So it's a fact they would have done it. There are a lot of big companies. If you talk about this big four, Deloitte, KPMG, right? Then in India we have one Parley Group, and there are so many companies globally. Also, you can see they're even bigger, and it's like multinational company, or we can say they are part of Fortune 500 companies, but still they are not listed. It's up to them, because there are certain disadvantages that come with the listing, especially the scrutiny and the transparency they have to maintain and give away a lot of information which goes to the competitor also. So companies can choose not to be listed.
But Misbah, the market, the industry in which they are operating, they don't have a USP, what we can see. They are taking the elements, they are good at it, they have precision, but that everything can be like copied, like some other company can copy it. So they don't have a USP. So I think that's why they are not yet listed, this company in specific.
Maybe, if you see about most of the commodities, or even in this kind of products what we are doing, most of that can be imitated, and there are companies who are imitated. So what we have to do, and what successfully it is going on for decades in business, is creating a brand, creating trust, creating intangible value, creating higher perceived value. Maybe it is the same value, but we have to create something which is perceived as a higher value. So me, that's how we have creating a differentiator for the sales Samsung. But if you linking it to listing, maybe that can be one of the reason, but there should be other reason as well. Because even if they don't list and somebody is interested, let's say their competitors, and somebody wants to come into this business, like contractor, they want to do backward integration, they can still do it, right?
Yes. And with
And
balance sheet, I have one more question.
Yeah.
It's regarding the bank. Bank balance has reduced for both the companies. For competitors, it has reduced a lot. By around 40%, it has reduced in the bank balance. And for us, it's like so the but the first for the competitors, the different part is their receivables has also decreased.
Right.
So if they have got the money, but how the bank balance? But they have slight investment in the PP, in the fixed asset thing. But for Shiny Glass, they have also reduced by 7%, but they have increased their 10% that intangible thing.
Right. So
Yeah.
firstly, for PPE, maybe we have got depreciation. Because of depreciation also it is possible, isn't it? We don't
Yep.
know exactly, but that may be one of the reason. And as far as that
Yes.
is concerned, maybe we have invested. We were just talking about operational efficiencies. So we might have used our money from this. to invest in something which helped us to get intangible asset, and ultimately it has improved our operational efficiency. And this is why operating expenses are reduced despite being the revenue going up, isn't it?
Got it.
That
Yeah,
that
from
makes
intangible asset, what I can remember is like they have patented some of their technology, like that cutting thing, which they are proud of. So I think they have patented that technology, or they have invested in their brand, or they have invested in technology or software. Only these things are coming in my mind, or they have just increased their goodwill.
possible, because in this business patents are super important. Like we just said, anybody can copy, so we can design for the patent also. We can file the patent, right? For design, for the process, for the name, everything can be either patented, trademark, registered, all of those. So legal thing is very important.
Misbah, we don't have to assume anything until the unseen portion or the questions comes up.
In unseen, when they ask you certain thing, they'll give clarity at least around that. So that time it will be
So we
easier,
should
it will be
stick
less
to that rather than
ambiguous.
assuming something. Like we have assumed a lot of things regarding PP, and
Right.
so
In exam, if they're asking specific to this number, let's say they're asking with the bank, that time you don't have to assume because they'll give a clarity.
hmm.
So that you don't have to worry. Whatever they're asking specifically in exam question, they'll give clarity in the attached material and the question itself. So you don't need to worry. But for now, what we are doing to understand as a business, therefore we are using the word assuming. We are not saying it's a fact, like we said for other things.
Yep.
And if there is something you feel like you have to mention in your answer, and that is not, and that was not given in the pre-scene itself, so you can be little diplomatic with your answer, with your words, so it will be easier for you. All right, so inventory has almost remained the same. It is slight up. So usually companies nowadays want to reduce the inventory, but at the same time they want to have little bit of inventory, or at least some kind of inventory, depending on their processes, their risk management profile, and all of those. Trade and other receivable, in a way trade and other receivable is good, because when we are doing B2B business, you'll have certain percentage of sales coming from credit. I mean, it's an industry now, you can't do anything with it. The total asset has gone up despite our PPE going down. I mean, it was not a major one, but we have got a good growth, almost 17 million in intangible asset. That means other thing is intangible asset, we might have been doing R&D. If R&D is successful, anything with that we can add to the intangible asset, IS 38. So we should know that if it qualifies for the intangible asset or not. Then equity, share and share premium. Being unlisted company also, we can have a big amount of shareholders. Retained earnings has gone up. Obviously, we have just seen that. Non-current liabilities has remained the same. So non-current liabilities, usually companies can increase and they can leverage to get the tax benefit, which we have not done in the previous year. We don't know before that. Okay. So one thing we can do is look at the gearing. Okay, because gearing is something which gives us an idea about what we are doing in terms of finance. How much is your
The
gearing?
loans, both the company are having 9% interest rate.
Is it coming 9? Okay.
Yeah, because it's 800 and what we have paid is 72.
Yeah, if you just divide by that, just 8 coming 9. So that may be
The
overall.
other
Usually what
company is less.
companies do in terms of interest rate also, they want to go with fixed and floating. They want to go with mix. But it's coming around 9. So you're saying computer is also 9? We'll
9,
come
yes,
to that.
654.
Okay, okay. So
So
one
we can
thing is,
assume that this industry is having a 9% loan. Whenever they are going to bank, they are getting a 9% interest rate loan.
I mean, it's a kind of assumption again, because the interest rate depends on so many factors. Firstly, it depends on our credit ratings. It comes
Mhm.
under A, B, and C. Like, like S&P and Moody's, we have this organization. Then depends on what collateral we are giving. Depend on how much gearing we have. I was just coming to that. Then what was the previous loan we have taken? Are you taking for short term, long term? So there are a lot of things. But assuming both are a similar company and a similar size, not exact size, but similar size, maybe
Similar.
this thing that
So, but we are like 40% higher than them, like in terms of revenue.
right.
So shouldn't we get a slight advantage with the bank? Like they could just give me like 1% slack.
Maybe
Or
they are
they
just in negotiation,
got it.
and
So
maybe
it's an
as well they
advantage
have.
for the competitor because
But
even though they don't have a such a revenue or such a profit scale, but even though they have cracked up interest rate similar to us.
yeah, maybe. Or there can be another issue is like, if you look at property, plant, and equipment. Let's say we have more of plant and machinery, and they have more of factories and all. They have more of appreciating asset, and we have depreciating asset. Like machinery and
Hmm.
all are
Yep,
depreciating asset, which we are using as collateral. And they might have like real estate kind of thing.
got it. Yes,
They have
yes,
appreciating asset. So for that,
yep,
bank is more comfortable to take as collateral.
yep. Makes sense. This is a very good point. Yep.
There can be so many things. Now coming to the gearing. So usually for gearing we use debt by debt plus equity. So our gearing also looks like it has come down. Why it will come down? Because our debt remains the same, but the value of equity has gone up. So how you'll do? You'll take 800 divided by 800 plus 1620.3. You know the gearing formula, right?
Yeah, it just increased by like 0.14%.
It has
It was
it increased or
like it
decreased?
has decreased, increased in a better way, as in
Yeah,
now they have a lower
point one
gearing.
point 1% it has decreased. It was
Yeah,
33.2. Everybody, you're getting the gearing formula debt by debt plus equity. If you want, you can just solve it, or it is there on the familiarity kit also. On
yeah. It's
principal,
33.05 for 2024, and now it's 33. Earlier it was 33.19.
19. Okay. So I think they have just rounded it there, 33.1. So as per a lot of theories, until 50% it is considered good. We can leverage that. But after 50%, it is considered riskier. So we still have good opportunity to take on debt. I think the best opportunity for us now to go international, because we are already an industry leader in Templand, isn't it? We have the highest market share, revenues are going up, profit is going up, we have tax benefit, we have shareholders where we can raise money from there as well. But yeah, one thing is, I'll not say the disadvantage, but it's not an advantage for us, is when you're unlisted, it's difficult to raise finance through shareholders because you have less number of shareholders. Maybe they are more of institutional. Shares are less marketable when you're unlisted. So debt remains the best option for us.
Let's go. What current ratio and quick ratio plays a role, because I can see like competitor has a better quick and current ratio compared to us. Though they have dropped from last year, but they still have a better percentage.
Current ratio and quick ratio, usually these are used to see what is your current liability, basically current receivable and current payable.
Yeah, all my short term together.
Yes, how you are managing your current receivable and current payable. So it talks about the liquidity of the company.
Got it. So this could be one of the reason why they have a better interest rate. as
I mean,
compared to the
I don't think so exactly, because this is more to do with the working capital. If our current and quick ratio is good, that means we don't need to put a lot of money in saving as a retained earnings, because we have the
Yep.
advantage.
Yes, that's why they have given a 77% dividend also.
Right.
Ms. Vasavi, I have a doubt. So if we have the retained earnings, actually, okay. So this retained earnings, we will it will be used in other product, so we have a retained earnings of 1,210.70, no? Okay.
Mhm.
So
Okay.
this will be as a kind or will be as a bank or cash or something like that. How is
Right.
it?
So
How does
basically,
it work?
retained earning is something which is like it is being accumulated over the years, right? If you go back to just
Okay.
year change in equity, we started with 1210 million, 1,210, and now we close at 1220. Correct? So
Okay,
retained
yes,
earning,
yes.
I mean, technically, ideally it should be the cash. We should have that level of cash, but we will not have it. Why? Because when we do accounting, we use certain assumption. For example, you must be aware of accrual based of accounting. So, what does accrual based of accounting says? Even if you have not received the money, if you have got the order, you'll just account that money has been received. Now you are closing book on 30 September 24. Maybe the money is yet to receive in January next year, right? So there are a lot of
Yes.
assumptions that need to be made, whether you're filing IFRS or Indian AS, Indian accounting standards. So therefore, retained earning is not equal to the cash in hand what we have. But at the same time, are
Okay.
we saying it is equal to zero? No. We'll have some of that, but some of that may be still yet to receive.
So why I asked this question is, if
Hmm.
we want to invest in something, okay,
Right.
uh, usually we will come at the point that we can use the retained earnings also, no? Okay.
Right.
So in this case, uh, we can't use the retained earnings unless we have to sell something, no? Am I right?
Sell. I didn't understood why you want to sell. You can use retained earnings. I told you, no, in the start we can use retained earnings, but we cannot say that we should use the entire retained earning. Firstly, we don't have it in cash to use it. Secondly, retained earning is usually kept as not exactly the risk management, but to cover the working capitals and other short-term needs what we require.
Okay. Yep.
If you have any issue with the working capital, if you need some money, then we'll use the retained earnings.
Okay. Okay.
Everyone is clear with that point. Now taxes has gone up. That is uncontrollable. We can't do, especially with the indirect taxes. Trade and other payables. Trade and other payables. Again, it's good for the company if you are getting more time in credit. We should give less time in credit and get more time in credit. So we have more control on the cash flow. That is another. But at the same time, if you have too much of it, it will affect that quick and current ratio. It will affect our current year's liability, current payable and receivable. All right. So this is what is more important for your financials. So your financial is not about uh, calculating or remembering each one of this, but we just have to link to the company's financial health, because when you're suggesting something, when you're talking about something as implementing the strategy and all, we should know the numbers. The same numbers can be there when you are giving strategic case study, when somebody is giving operational case study, but the way we look at it is different. Even for the competitors, a lot of things remain similar. Extract from West Eglint annual report. It is one of Shinyglass direct competitors. So what do you mean by direct competitors? Somebody who's into the same industry. There are different types of competitors. Like Pepsi and Coke is direct competitors, and if you say Ittihad and Emirates is direct competitor. But there are some competitors who are industry competitors. Like Nike and Adidas is direct competitors, but Nike, and if you talk about, let's say, Bata is a cost leader product, right? They sell for cheaper, and Nike is a little bit of premium. So they are direct competitors? No, they are industry competitors in the same industry, but one product is focusing on a differentiated luxury product, and other company is focusing on a cost leader market. Like that of Chinese, we can say Apple and some of the Samsung phones direct competitors, and others are like industry competitors. So we have direct competitors, industry competitors. Sometimes it's just a form competitors. Like they are doing the same thing. Either we go by flight or either we go by train. They're satisfying the same needs. There are different kind of. The closest is the direct competitors who are doing the same thing like what we do. So we take direct competitors, and especially from our own country, so we can easily compare with that. It is organized in a similar manner with its own network of salespeople and installers across template. Similar manners means they also don't hire, they also don't have the salespeople for full time. And if you see, there is a difference that their cost of revenue they have maintained, but operating expenses have gone up. So in that we have overtaken them in efficiency. Then, I mean, this is just for comparison. We have already kind of have a look. Any questions you have from their perspective? Even they have not raised the finance recently. Overall, both of us are growing. So what does it tell is the industry is not saturated. When the industry gets saturated, no, that means almost the entire industry is penetrated. So if you want to grow, you have to take away the competitors. You have to take away the client from the competitors. You have to just go and take their competitors to bring it here. But when the industry is growing, they will also grow, we'll also grow. It's not like they are taking our market share, we are taking their market share. The overall market itself is growing. But when the market stops growing, it becomes saturated. Then it's like we have to take their competitors to grow our business. That's the time when company thinks, okay, let's go outside the industry, or let's say outside the market. That's a good thing for the industry. Both are growing means the demand is also growing. And they have also given 76% of the dividend. Maybe that's the expectation. In terms of share capital also, they are smaller to us. We have 400, they have got 300. And if you look at intangible asset, still they have also gone up. A lot of similarities. PP has increased for them, but for us it has reduced. But again, it's not a massive difference. Inventory has gone up. It depends what they're following. Trade and other receivables have gone down. Bank has reduced. I mean, for us also it reduced, but for them it's a little bigger. Maybe again it can be related to the intangible asset investment. We are just assuming. Retained earning is 902 plus the share capital. How much is their gearing? If you just do 600 divided by 600 plus 1200, how much it is coming?
It's at 33%.
33.
If I'll check the decimal, they have
Okay, how
also
much it was
reduced
last year?
by 8. It was 33.36 last year. This year this is 33.28. So 8%, 0.08% they have
You're right.
went down.
Similar in terms of gearing also. Gearing is also looked as a financial risk, because when the gearing increases, it is considered that company's financial risk has increased. And when the financial risk increase, the expectations of the shareholders will increase because they are taking more risk. They want more returns. So that way, both the companies are doing good. Current liabilities, obviously the tax should go up because the profits have and revenue has gone up. It can be indirect taxes. Then trade and other payables has gone up. Maybe they have changed in the terms with that. The receivables have reduced and payables have increased. Maybe they have got into new terms and conditions with the supplier. So that's it from the financials that we need to focus more on. I'll suggest you to go through the ratios again and try to uh, see it. Okay. Any questions? Any questions, anyone?
No, Misbah.
Okay, so
No, not at this moment.
if you guys want to do some discussion, you guys can get on call and do that. And if you want to discuss on that rest SWOT also, you can do it. But don't just copy from each other, because if you just do that way, you won't remember anything. If it is your work, it will help in your exams. Okay. So on remaining, we'll be focusing on the industry, then